Hello and welcome to Martin Lucas Investor. My name is Sensei and you are here for the FOMC meeting live reaction. We got the interest rate decision. We saw Kevin Warsh's speech. We saw the Q&A. We're now seeing the market reaction and I'm going to break down what was said. So thank you everyone for tuning in. First things first, if everyone can please take a second to hit that like button. It takes 1 second and you can do it for free. So please do hit the like button. Subscribe if you haven't done so already. And let's get straight into it. First thing I'll mention is the newsletter. We put out a cheat sheet. So if you're not a newsletter member, you can sign up for free. You can become, and again, the free plan, even that doesn't have ads, sponsorship. We don't take ads. We don't take sponsorship. We don't like being controlled by other people. Anyone else who has ads, anyone else who is promoting leverage trading, anyone else who's got sponsorship deals, they are being controlled. They have to sign agreements to not say specific things. We are free press. We are free media. We give our honest thoughts. They are our thoughts. They're not financial advice. We're reporting the news as you should without anyone influencing it. So having said that, that goes for the channel. It also goes for the newsletter, the free plan, even the free plan. There's no ads, no sponsorship. The paid plan, no ads, no sponsorship, and you get many, many perks. Those perks being chart training course. You get the trading view indicators. You get the cheat sheets like we put out before this FOMC event. Everything to look for, the charts, how to understand it. We'll be giving you a debrief. I'll be sharing with you my $5,000 portfolio, trying to take that to 10,000, then 15, then 20, then 50, then 100,000. Hopefully, again, it's not financial advice. I'm showing my journey. You get the daily news. So every morning, 2 hours before the opening bell, we give you the news stories of the day. We give you one-on-one DM access. You can message me anytime. And the perks go on and on. The XRP weekly, the trading posts, all of that is included in the premium plan. That's the first link in the description. So have we got 100 likes yet? Because there's no reason to start the show without 100 likes. We've got 232 people, maybe even more. Let me see. How many do we have? 238 people and only 33 likes. So let's get straight to 100 likes. I have left a 25% discount for the first 3 people that sign up to the newsletter. That's the first link in the description. Maybe I should pin it here as well. So while you guys are hitting the like button, let me just pin it as well. We won't start the full analysis, and it's going to be very, very to the point analysis, everything you need to know as soon as we hit 100 likes. So let me refresh this so I can pin the comment. There we go. I'll replace that for now. Okay. So have we hit 100 likes? Let me show you what I'm looking at. I'm looking at the likes. As soon as we hit 100 likes, we can get on with the video. Let me refresh it. That's me. We'll go through the chat in a second as well. Let me close that and see the likes. 53 likes. What is going on? Please do take 1 second to hit the like button. Let me move that over slightly. 53 likes and 226 people watching. We can do much better than that. While you guys are hitting the like button, and I don't know, for some reason, some of you still haven't. Let's just have a look and see who's here with us. Outdoor Building is here. That Fed meeting was horrible. Kevin Warsh brings nothing to the table, says Outdoor Buildings. Well, we'll go through what he said, what it means. Let's get straight to the point on this live, Sensei. We will. I've got everything set up for you guys. So I've got the Fed decision, what we need to know. There was a hold, the 9 to 3, everything you need to know. I'll go through it as soon as we hit 100 likes. It really should have already happened. Let me refresh it. 67 likes. There are many people that haven't hit the like button yet. Good afternoon, ladies and gents. Rayan is here. Dell is here. Hello there. Hi, Sensei. Give us your words of wisdom. We'll get straight there. Martin kicked me out. We're gonna give you what did Kevin Warsh says? The Lucas. What was it? The Lucas critique. The Lucas critique. We're gonna give you the Lucas critique. Hello, everyone. Says Masio Slim. Will UK's here. Sensei is late, lazy. No, we waiting for Martin to finish. There's no point both of us being live together. Tonight's Meta and Microsoft earnings better be beat. We're going to be covering Meta and Microsoft later today. I will touch on that in a second. SBC holding up like a legend. Okay, I think we've hit 100 likes. I mean, I can't. Let me refresh it. 73 likes. Guys, there's so many of you that are watching me right now. Just hasn't scrolled below and pressed the like button. What is going on? It takes 1 second. They keep the rates. We'll come on to that in a second, and nothing else happened. Well, a few things happened. You have to read between the lines. You have to see what the statement said. You have to see what's changed, and we're going to come on to that just now. Well, we're going to start anyway. I can't believe we didn't hit 100 likes. Let me refresh it. We must have done by now. Refresh. 84. We're nearly there. Let's make it as a video, so in case anyone from different time zones wants to tune in. In fact, we're going to have to skip through the market watch, and we'll come on to the Fed decision, Fed report, Kevin's speech. Okay, so don't get confused if you're watching this live. I'm just going to record it as a video so that people in different time zones will want to know about this important FOMC decision Q&A. So I'm going to do it as a video, and it will come out later again. But you're watching it live with me now. So let me record this. 3, 2, 1. Breaking news on Martin Lucas Investor. We've just seen the FOMC rate decision. We've seen Kevin Warsh, the new Fed Chair's second press conference, where he firstly gave a statement, then he did a Q&A. So everything you need to know from the FOMC, if you missed it, or if you did watch it and you want to know what it actually means, well, in this 20-minute video, 10-minute video, it's not going to be too long, but I'm going to go through everything you need to know about the FOMC decision here on the 29th of July, 2026. Let's get straight into it. I have already released a cheat sheet. From that cheat sheet, the hours of research we did this morning, I could very easily create a secondary post. So let's go through that. The Fed held 3 broke ranks. What am I talking about? Well, rates stayed steady. I predicted that. We predicted that on the show. That's what happened. The statement did not change either, really. There's one bit that changed. We'll come on it in a second. The vote did change. 9-3, and they all wanted them higher. So 3 people dissented, and it's actually a very interesting dissent. So again, on the surface, you might think nothing's happened, but when you dig deeper, it actually quite a few things did change. So firstly, it was a hold. 3.5 to 3.75%. It's the 5th meeting in a row they held rates. The vote was 9-3. June was 12-0. There was a unanimous vote last time. Now it's a 9-3. Hamek, Kasharaki, and Logan dissented, and they wanted hikes. And one word did change in the statement. Reaffirmed changed to is continuing. And that actually means a lot. So we'll come on to that in just a second. So what just happened? No changes to rates. Rates stayed at 3.5 to 3.7%, where it has been since December. 5 holds in a row. 3 officials voted against. Beth Hackmuck of Cleveland, Neil Kashkari of Minneapolis, and Lori Logan of Dallas all wanted a 1/4 point rise today. They wanted rate hikes. They didn't get it. The statement is a photocopy of June. So if you look at the statement, and I went through it, word for word was the same, apart from one. The word reaffirmed became is continuing in the balance sheet sentence. I'll explain more of that in a second. There was no dot plot this meeting, so if you're expecting their projections, we won't get that until the 16th of September. Balance sheet is untouched. Everything is still being reinvested. There's no runoff or no quantitative tightening there either. This is the most dissents in the same direction since 2019. So April did have 4 dissents, and that was the biggest one, like dissent since 30 years. But the interesting one about this, April did have 4 dissents, but 3 of them were hawkish, and they were arguing about wording. So they were voting on the statement, and they changed the statement. So it wasn't, in theory, voting on hawkishness. They were voting on the wording of the statement. This time around, the statement is very tight. They all agreed on it last FOMC, but what they're actually demanding, all 3 of them are demanding rate hikes due to the wording of the statement. So the market priced in a 33% chance. They basically priced in a roughly a 1 in 3 chance that there was going to be a rate hike. I was very confident. Martin was very confident. We're very confident on this channel that wouldn't happen, but the market had priced it in at 33%. The Fed didn't deliver it, but 3 of the 12 voted for it. So we knew there would be a couple. There was actually more than a couple. There was 3 people that wanted a hike. So 3 people voted against them. Let's just hone down on that in a second. So why does this matter more than usual? Well, I've put together this graphic for you on the screen. In January, you can see 2, March 1, April 3 in red, 1 in blue. June was 0. Today was 3. That's the amount of dissenters. The important part of red, I'll come on to that. So why does this matter more than usual? There is no dot plot today, and Warsh abolished the forward guidance. The tally is the only hard number the committee published about where it's heading. So this is the only direction we got about where rates are going. Wasn't from the dot plot. We didn't get anything. The statement is different, so it doesn't give us an indication. It's all about the votes. So in April, Hammock, Karashki, Logan dissented over a sentence in the statement. So if you look at the April one on the screen, there was 3 and 1. The reason they dissented, it was April, Hammock, Karashki, and Logan. 4 people dissented, but it was because of a sentence in the statement. Warsh removed that statement, and everyone was unanimous in June. Today, the reason of their dissent wasn't because of their statement, it's because they demand a rate rise. So this is actually a far bigger step, and all 3 of them took it. So again, it's they vote on the statement, and it depends on the wording of the statement. In April, the wording of the statement, the reason they dissented and voted against it was because they wanted the wording changed. Not necessarily they wanted hikes, they wanted the wording changed. And you can see that in June. The wording was changed by Kevin Warsh, and they were all unanimous. The only way to vote against the statement today is if you were hawkish. And that's why today's data is a little bit different. So that's why you have to really understand what's going on. So 3 people actually wanted rate hikes because of the wording of the statement and the way they dissented. So the other thing is the statement. The statement was essentially the exact same photocopy of the last one, but 1 word changed. So if you look at the June the 17th statement, the committee reaffirmed its policy of maintaining ample reserves in the banking system. Today it says the committee is continuing its policy of maintaining ample reserves in the banking system. So you can see it changed the word from reaffirmed to is continuing. And that's the only change in the statement Kevin Warsh gave. And that's important. So every other sentence is identical. Same growth line, same jobs line, same inflation line, same closing promise. What did not change, and it's important to see what didn't change, was a quote, I quote, "The committee will deliver price stability." That didn't change. No conditional verb bolted in. We were watching for is prepared to act. That's what I was watching for. And if that came into the statement, that would mean something. They are prepared to act. Essentially, they are prepared to raise rates. All they continued with their statement, and that means a lot. That's actually kind of dovish because they didn't change their wording. So they've committed to the committee will deliver price stability. I thought potentially, and I gave it a 50% chance in the cheat sheet, that they would say is prepared to act, but they haven't. They just said that they will deliver price stability. They didn't say they're prepared to act to deliver price stability. They didn't say that. So that's a little bit dovish. They also said supply shocks, including energy. That survived intact. That clause is the committee's license to look through high inflation. So when they said with supply shocks, including energy, they're basically saying we will look through supply shocks. So if there's a shock to the market, like a war, like energy, they are happy to look through it. That stayed in. So again, that's kind of another dovish thing that stayed in today's statement. They also kept an elevated uncertainty conflict in the Middle East. That survived. So elevated uncertainty, that survived. Again, if you're looking at oil today, and we predicted all of this on our chart of the day in the newsletter. And again, if you are part of the newsletter, first link in the description of the, you can sign up for free, no ads, no sponsorship, or you can become a premium member. Again, no ads, no sponsorship, and you can get the chart training course, the 3 trading view indicators, the charts of the day, the technical analysis course, which again, some people value that at $1,000 by itself. That's included in subscription. The morning forecast. I think we've just got a wonderful super chat. I'm going to come back to that as soon as we finish this video. I haven't even read it. I don't know why it didn't come up on the screen. My super chats are on. I'll come straight back to that. Oh my God, look at that. Right after this video. If you're watching this later, this is recorded during a live show. You can subscribe and join us live when we make these videos. Please do leave a like as well on this stream if you're watching live or watching this later as a video. I wanted to create this as a video just in case some of you missed the FOMC or the Fed decision. So we'll be posting this once this live event finishes. So yeah, link in the description. You can get 25% off the first 3 people only. And then you can sign up for the premium plan or the free plan. Anyway, oil, we predicted this at literally, I mean, oil has been one of our best trades of the year. We bought it at $66. Where did we buy it? Firstly, before the war, or actually on the war when we realized as well. $67. We took that to about over $100, $120. That's where we sold. I bought back very recently at $66. Took profits around $80 to $85. $92. I turned bearish. Bought back at $78. Now we're here at $85. I'm actually going to turn a little bit bearish here. I'm actually going to take some profits. But anyway, because oil is still up, and you can see it up 7% today, they've kept in the sentence. Elevated uncertainty, conflict in the Middle East, because there is still elevated uncertainty. Anyway, jobs language was untouched. So their statement about jobs was even after the downwards revisions, they haven't changed it. And inflation still is just elevated. It's not elevated and broad-based. All they're saying is elevated. So when we come onto the FOMC minutes, which we'll cover in about 30 days or about 20 days, we will see why they actually said this. Again, we cover that because that gives us a behind the scenes to the Fed report. So we've covered the statement. We covered what's actually happened. Let's go a bit further about how to read it. The hawkish half. 3 dissents is a warning shot. Our own guide this morning said 3 or more means September is effectively pre-committed. And there is 3 dissents. That is a warning. That is a warning shot gone out. 3 dissents. 3 people want rate hikes. That's only going to go up if oil, and my thoughts are, it always comes back to oil because oil impacts inflation. We covered that in the cheat sheet. I showed you how much oil affects inflation, and PCE and PPI. Again, PCE is tomorrow morning, Thursday morning. We'll be covering that live on the show. That's very important as well. But essentially, I'm making it very simple. Between $80 and $90, the longer we stay here, the higher the chance of a rate hike. If we get above $92, a rate hike is confirmed. So if we stay above $80 for another 2 weeks, I'm very, very confident that we will get a rate hike. If we get to go below $80 over the next coming weeks and we stay there, then we can avoid a rate hike. So that's the way I'm watching it. I'm watching it in regards to oil. So that's one thing. 3 dissents, warning shot. That is a big warning shot, a bit more than we actually expected. There are named and on the record, Hammock, Karashki, and Logan are now going to be talked down. Now have to be talked down or outvoted again in 7 weeks. What's going to happen? Warsh only has to lose 2 more votes for the Hawks to have the majority on a 12-person committee. So if 2 more people go hawkish, this can all change. Nothing in the data changes before September. That obviously helps the doves. Oil turned back up quickly today. And if you look at the dovish side, we need to keep both arguments open. There is some dovish comments. The chair did not give Hawks a single word throughout that whole press conference, throughout that whole statement. He could have hardened language in the statement as a compromise. He did not. Nothing hawkish. He did not want to say one hawkish thing. He didn't want to say one hawkish thing, essentially meaning that's a dovish take for the market. The energy gets out clause, stays. So while that sentence is in the statement, the committee is formally looking through the inflation overshoot. So they've kept this word in the statement, and essentially is that elevated. It's the supply shocks, including energy. These words are very important. You might be going, why is he talking about all these words within the statement? Why is he microscopically looking at these words? The reason we've put these words under a microscope is because they spend hours and hours and hours writing these words and debating whether they should change these words. And when they don't change it, or if they do change it, it means a lot. So when they keep in the words supply shocks, including energy, it's saying we are happy to look past these supply shocks as long as they are shocks. And they chose to keep that in, suggesting that it could still just be a supply shock that they could look through and not raise rates. 9 of 12 backed no change, so including the whole board of governors. So 9 out of 12 people backed no change. No balance sheet tightening. So we haven't seen any QT, which the market wouldn't have liked. So the short version is, the committee is split and the chair is holding the line. He gave the Hawks nothing on paper, and 3 of them went public anyway. Let's put this against our cheat sheet this morning. Remember, we put out this cheat sheet here, the Fed decision. This went out to all our premium members. It got everyone prepared. It gave people information. It educated people. Again, I don't give financial advice. I don't tell you what to do, but I do want to educate you on these decisions because it affects your portfolios and you want to become better educated in the market. So I answered everyone's questions. Very simply, hang on. The Fed might raise rates. I thought cuts were coming. For anyone that was thinking that, I gave a very simple explanation. Why would they raise rates when inflation just fell? Because last month's inflation fell. Well, I answered that question. You can look at these questions. What happens to my mortgage and my savings? What do I look at with PCE? What is a hawkish hold? Again, I answered everyone's questions before it came out. What does it mean with bonds? What time are we covering it? What does it mean for crypto? This was all in the cheat sheet that you could have got as a premium member. What time do we expect it? What do we expect them to say? What's the percentage chance of what we expect them to say? What is good to hear? What is bad to hear? What's priced in? The charts? What the CME Fed Watch tool is saying? What's Robinhood saying? What's Kalshi Polymarket saying? Comparing them, understanding the prediction markets, seeing if there's any arbitrage opportunities there. You've got hawkish hold was 70% odds. From me speaking to the analysts, from my own knowledge, we put different ratings on different decisions. How each outcome trades. So I told you, what does it mean if we get one rise, one hold, whatever? Nice table, simple explanation. And again, you can go to your favorite sections or you can read the whole thing if you want to become more educated. And again, this is for advanced traders, it's for intermediate traders, and it's for beginner traders because I make it very easy to understand. The room and the words. Again, I won't spend too much longer. Again, you can see the very nice charts we put together, how the data got us where we are. I showed you core headline CPI, core PC, core CPI, all in a chart to show you how that affects the rate decision. Anyway, that's from this morning, and let's compare what I told you what was going to happen this morning. I gave you my odds. Now, was I right? Was I wrong? Was it worth it? Well, look at this. The decision we got correct. Who dissented? All three of them dissented, as we said. The vote count 9-3. The closing sentence, I gave a 50% chance of that closing sentence changing. It didn't change, which is a bit more dovish. The energy clause survived. I said that, and it did survive. Balance sheet unchanged. You can see Sensei C Discord. Yes, I'll come on to that in just a second. I'm going to finish recording this message I did. Maybe you didn't see, Martin. Anyway, I will continue. The energy clause survived and the balance sheet unchanged. Again, we were right on all of them, apart from potentially I gave only a 50% chance to the sentence changing. It didn't change. And I said potentially either 10-2 or 9-3. We got 9-3. Did they tighten anywhere else? The headline rate is only one of the numbers the Fed sets. There are three more, plus the bond portfolio, and any of them can tighten policy without a headline. Here is the check. So I'm going to come back to this because we've just got something crazy happen live. So if you're watching this as a video, stay with me. But look at what we've just seen happen in the live chat. I cannot concentrate while this has just happened in the chat. Let me refresh it and show you what has just happened while we've been recording this live. Robs just gave an $100 super chat.
The year is 1991.
Wow.
Birds and people are
And he said, "Let's go, Sensei. You guys deserve a break. A lot of work you do for the members. Beers on me or a good dinner, bro." Yeah, we and Martin appreciate that so much. Thank you so much. Yeah, some people don't obviously see the stuff we do behind the scenes with the newsletter and how much time it takes. So I really appreciate, Robs, what you've done there. Thank you. You guys deserve a break. A lot of work you do for the members. Beers on me or a good dinner. Thank you very much. We greatly appreciate it. Thank you for supporting us. Thank you for supporting the channel. Thank you for supporting me. Thank you for your super chat, because $100 is, I mean, as I said, we aren't funded by sponsorship. We don't take any sponsorship. Remember, Martin turns down $50,000 deals. I've now started getting all sorts of sponsorship deals in the emails for the newsletter. I'm not taking them. We're not doing it because we don't think it's right. I mean, the amount of people that do charts, So imagine my field for a second. So I'm a chart analyst. I look at charts. I do trading. I do leverage trading. All of this. The amount of money that other people make, and again, I'm not going to judge other people unless they're doing it maliciously, and a lot of people are. They are faking trades. They are faking their Lamborghinis. They are out in Dubai renting cars and pretending they're making all this money. They are just running signal groups that are just full of losing trades. They are selling chart trading courses that aren't based off academic research. R1 is provided for free within the newsletter. And they're promoting leverage trading. But 95% of people just don't leverage trade. But what they do is they make you think that you can make so much money leverage trading. They get you on a platform, you use their commission links, and they know that 95% of you are going to lose, but they don't care. Why? Well, because when you lose money, they make money. When you make money, of course, they make money as well. But it doesn't matter whether you lose or win. To them, they're making money. Every single trade you place, every single loss you have, they are making money. They just want to, again, take money out of you guys. We don't do that. We've never promoted that. We don't take sponsorship. So thank you to Rob's. If it's not like people like you who super chat, people that join the newsletter, we couldn't really turn down all these sponsorship deals. So thank you so much, Robs. I appreciate it. We appreciate it. The audience appreciates it, because it's not just look at Rob's supporting Sensei, supporting Martin, supporting the channel. He's supporting the rest of the audience, the people that aren't members, the people that are watching. If it isn't for people like Rob's, again, he's supporting everyone. So again, thank you so much. I had to pause that video there for a second to go there. Let me go back to where we were. So did they tighten anywhere else? Every maturing Treasury is rolled over at auction. Mortgage bond proceeds to go into Treasury booth. Nothing runs off. The portfolio is not shrinking. So again, they're not tightening either. So Warsh has argued for years for a smaller Fed balance sheet. He's essentially asking for quantitative tightening. If he wanted to tighten without touching the headline rate, this is where it would have shown up. It didn't. So they're not really tightening or quantitative tightening. Here is some of the quotes from the press conference. Again, some of the more important quotes we got today. Let me see if I can. So yeah, if you do want to sign up to the newsletter, first link in the description. There's 3 available. I don't know if it's gone. I'll try and pin it again. Let me see if it's my last message. Yes, it is. Let me pin it again. Oh, there we go. It's in the live chat if you do want to join the newsletter. And then I'll onboard you to Discord as well, as that's one of your perks. You can get onboarded to Discord and access those Sensei channels. And then you can join me on Sunday for free chart analysis and all of that sort of stuff. Some of the key quotes. This is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous. He said, so again, that was on the 93 split. He was asked how much June soft core inflation drove the hold. So we saw very soft core inflation. He was asked how much did that affect the decision, and he said in two words, not much, which is a bit weird because it's all about inflation. I thought that's weird. Anyway, on tightening in normal and real rates since June, he said we haven't done much in 42 days. The markets have done quite a bit. He's very different to Jerome Powell. I don't know if it's for the better or for the worse, to be honest. And then he was asked on any idea the Fed's tolerance. Idea the Fed tolerates more. He said we will deliver the 2% inflation target. That is the committee's definition of price stability. Let's see if he gets us there. We haven't been there for 5 years. This is the closest thing to guidance in the whole press conference, he said, and I quote, "If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution." If inflation continues to be elevated, if inflation stays high through the whole forecast period, interest rates could well be part of that solution. So he's saying if inflation stays high, one of the solutions could be moving interest rates higher. So that's as close as he gave to guidance. He was asked directly for the argument in favor of pausing, and then he said, I wouldn't characterize what we did as anything like a pause. Did the Fed take an explicit change in its policy rates today? No. But that's the beginning of the story, not the end of the story, is what he said. So we are going to get ready now for our 2 earnings. I'll be ending the show in about 5 minutes' time. Martin will be live with Meta. He's just put in the chat, Meta have missed. So Martin will be going live shortly. I'll be going live with Microsoft. Let's continue just a little bit more, and we'll be ending this video and live stream in about 5 minutes. When Warsh was asked whether dropping forward guidance seizes control of his narrative, he said, any central banker, especially where the labour markets are more or less at equilibrium, when he or she sees underlying inflation moving higher, is more inclined to tighten policy. When you've achieved the other side of your mandate and you see underlying inflation falling, then he's more inclined to loosen policy. That's my reaction function, and he said it very clearly there. So what does that actually mean? Well, it means jobs are off the table. He thinks the labour market is at equilibrium, so he doesn't think jobs market is collapsing. If it was, there'll be rate cuts. He says that's not an issue. One variable is left. Underlying inflation up means tighten, doesn't mean loosen. That is the rule, and he said it out loud. So essentially what he's saying is, if core, forget about headline, look at core inflation. We'll be watching it tomorrow morning on my morning show tomorrow on this channel. If core inflation, we're looking at core PC, the Fed's preferred inflation metric. If core is elevated, then that's the rule to tighten. A rise was generally available today. Again, that's what that means. We didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us. So he says we could have raised rates if we wanted to, but we just didn't. The catch is the word underlying. The official target is still PCE per the January strategy document. That's our number. We're sticking with it. But he does not judge on it alone. So he said it's always looking at it's not just PCE. One soft print will not do it. If we see inflation down tomorrow, that might not affect his decision to raise rates anyway. There is more here. What I'm actually going to do is I'm going to put this into our Discord community, these slides I put together for today's show. There's not that much more to cover, but there is a few more. The 4 questions in the room. Has he really passed? Do different shocks act differently? And again, there's just a bit more. So we will put that into Discord. And let me just end the video first. If you're watching live, stay where you are. So there's 2 videos up here. If you want to join the newsletter, the link will be down here, over here. As soon as you join the newsletter, apply to Discord, say that you're joining because of the Sensei channels. I'll approve you, and you can get access to all of this. And you can also get all our cheat sheets and all the other ones. If you sign up for free, you can also get the morning forecast and some of the other perks. Until next time, as always, take care of yourselves and each other. Bye-bye. Okay, if you're watching live, let's go over to Meta. So I believe Martin's live. Let me just make sure this is going to send you there. Meta will be next. Then it's going to be Microsoft. So unfortunately, due to the time constraints of all of these earnings and all of this going on, we're going to skip through the charts and the Q&A, and we're going to go straight over to Meta first with Martin, then Microsoft with me. So Martin is live now. Let me... guys, and a lot's happening in the next 48 hours, by the way. We've got Microsoft Meta next. We've got Bank of England. We've got the June PC. We've got Bank of Japan. We've got Apple and Amazon. And we've got Jackson Hole next month. But anyway, a lot happening in the next 48 hours, so stay with us. So now it's Meta. So let me bring up the link for Meta. Give you all the link to go straight to. Is this right? Oh, right. I think Martin's live now. Yes, he is. Okay, here is the link. So in the live now. Oh no, that's not gonna work. Let me go here. Live now. Okay, so the link is in the live chat. If you stay where you are, you'll go straight to Martin. Hopefully that broke down some of the things we saw from the FOMC today. Was that all good? Any more questions? I will have to end the show. Go over to Meta. Later. Sensei's 100% tells the truth. Thank you, Brian. Yeah. Yeah, I'll be live later with Microsoft. So if you guys have any questions, I'm sure we'll have more time to cover it later. But again, Robs, you're the man. Thank you very much. Until next time, stay where you are. you'll be sent over to Martin, or click on the link in the live chat. Take care of yourselves and each other. I hope you found this useful. It took a lot of time to put together. I hope you found it useful. Bye-bye.